Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The sensex and the nifty end at a record high after positive GDP data lifts sentiment. Bank stocks lead the rally. The sensex and the nifty gain for the third straight week. Hyundai's global CEO all set to visit India within a few days to firm up the company's IPO plans. A high-level team from the Seoul headquarters has recently reviewed the preparations for the DRHP, which could be filed by May, followed by a possible listing in the third quarter of FY25. This could be India's largest IPO ever. World leaders condemn Israel after troops opened fire near an aid convoy where desperate crowds gathered for food assistance, killing 112 Palestinians. Israel denies the charges. The White House says the incident is tremendously alarming. France calls it unjustifiable. Turkey and Qatar, along with several other nations, call it a massacre. After Axis Bank, Paytm is in talks with Yes Bank to open a nodal account for 197 Communications. The move is aimed at ensuring seamless merchant settlements beyond the 15th of March. Sources say that Paytm will also apply to the NPCI for a third-party application provider license with 4 to 5 banks. The union government is aiming at risk-based uniform KYC norms across the financial sector by June. Sources say a discussion on harmonized KYC took place at a recent Financial Stability and Development Council meeting and FSDC meet, adding that the PMLA rules may need to be revisited to accommodate the framework effectively. Car sales growth remained steady in February. Two-wheeler sales rebound thanks to new launches and improved demand, but tractor and commercial vehicle sales remain in the slow lane. The WTO ministerial in Abu Dhabi is extended by a day as 160 nations struggle to find consensus. Thailand replaces its ambassador after India protested comments made on the subsidized food grain procurement program. Google pulls multiple apps from its Play Store without disclosing the names for violating its billing and payment policy. InfoEdge and Matrimony.com confirmed receiving notices from Google. More than a dozen firms have taken Google to court over its billing policy. The Supreme Court is still hearing the case, but refused to pass interim orders protecting the apps from Play Store removal. Elon Musk sues OpenAI and its CEO Sam Altman over its relationship with tech giant Microsoft. Musk alleges OpenAI compromised its original mission to build AI systems for public welfare and transformed it into a profit maximization entity under Microsoft. Well, more on the AI wars in just a bit, but let's start with the market action for the day. The Sensex and the Nifty rallied in trade after strong GDP data lifted sentiment on the Lal Street. So the Sensex gained over 1,200 points today and the Nifty gained over 350 points. 73,745 is where the Sensex closed, the Nifty closing at 22,338. The mid-cap index up 454 points, a percent higher. The Nifty Bank put on 2.5% today. That's a gain of over 1,000 points. So strong rally for the Nifty Bank today. Mid-caps did marginally underperform the blue chips. For the week, the Sensex and the Nifty have gained a percent. Prashant standing by now to wrap up the market action. Strong close to the week, Prashant.
Well, it started with, of course, the super strong GDP numbers yesterday evening. And then, of course, it was followed by very strong US market action. So this morning, it was looking good. Asian markets performed well. And here in India, by close, it was a 300-point plus gain that we had on the Nifty. You know, you would say that in the GDP numbers, it was some nuance, but there was no nuance in the market and the way the indices behaved. Just one way. No dip, started higher, and then, pretty much a trending day throughout the course of the session. The Nifty Bank did even better. That's been the weaker of the two indices. It's not even back at the recent previous highs. The swing highs, but 2% gain there, led, of course, by banks, which I'll get to in just a bit. Mid-caps and small caps, 0.8, 1%, but lesser than what the Nifty and the Bank Nifty did today. Now, large caps on the Nifty, you had gains in the steel names. Again, no noticeable sort of real big definitive news flow or anything of that sort. It's just that, maybe stocks have been not doing as well as some other pockets. Tata Steel, JSW Steel led. They're part of the Nifty. There was L&T, old economy really. If you look at the GDP numbers, the infrastructure side of things is what is really growing very well. The consumer side, not so much. ICICI Bank and IndusInd Bank were the other large Nifty gainers. In the broader market, 2:1, easy advanced decline ratio. I'll start with metal names here. SAIL and JSPL, top of the list, but really long list of volume-led gainers. Suven Pharma, Jamna Auto. There was Oil India, which did very well. Action Construction Equipment, Data Patterns, Juniper, which is, of course, recent listing. Borosil Renewables, Metropolis, ADF Foods. There was All of these, listings in the last one and a half years, Sula, Dreamfolks, Landmark, Jyoti CNC, there was something like a Bombay Dyeing and a Home First, which participated in pretty strong fashion on the upside. Hospitals continued to bear the brunt on the downside. Max Health, there was Medanta, Narayana Hrudayalaya, Yatharth Hospitals, and of course, the big one, which is Apollo. Zee, Dr. Reddy's and ICICI Lombard were some of the others which lost. PB Fintech, Inox Wind and Westlife also down between 2 and 4% or so. But at an index level, new highs on the Nifty. The Nifty Bank not quite there. But it's looking very, very strong. Tomorrow is Saturday, but we are trading. There's trading between 9 and 10 and then 11:30 and 12:30. So we'll see you back tomorrow morning.
Yes, we will. It is going to be a trading Saturday, of course, truncated hours, but nevertheless, there will be trading action tomorrow. Now, China's manufacturing activity in February has slipped for the 5th consecutive month. According to China's National Bureau of Statistics data, the country's official manufacturing PMI declined to 49.1 in February from 49.2 in January. However, an S&P survey showed China's manufacturing PMI improved marginally to 50.9 in February, which is in contrast to the national estimate. Hyundai's IPO plans for its India business gathering stream. Sources telling us that a high-level team from Seoul recently reviewed the preparations for the DRHP, which could be filed by May. The company also plans a possible listing in the third quarter of FY25. Parikshit is standing by. Parikshit, mega plans, on the anvil as far as the Hyundai IPO is concerned. Take us through where things stand.
Well, this could be the largest ever IPO in India. According to reports, Hyundai is looking to raise over $3 billion at a valuation of $30 billion is what we are learning. But the top CEO, the president and CEO of Hyundai Global Company, Jae-hoon Chong, is set to visit India in a matter of days. It could happen towards the end of the month, and he is finally going to sign off on the company's plans to go for a DRHP in the month of May. We also learned that if all goes through well, they are hoping for a listing sometime by Q3 of FY25. They will look at dilution of a small stake initially, especially for retail investors, but that is subject to SEBI approvals. Now, what is all this money going to be used for? Well, the company wants to fund its massive expansion strategy. Currently, they have a capacity of 8.5 lakh units per year. They want to take it to 10 lakh units per year by 2025. They've recently announced an investment of 6,000 crores to take over General Motors' Talegaon plant. They've outlined investment of 24 to 25,000 crores for a production facility in the state of Tamil Nadu, including an EV manufacturing plant as well, a battery manufacturing plant also. So they have lined up quite a bit for India over the next few years, and this funding is going to really cater to those ambitious plans. Very recently, there was a high-level team from the company's headquarters in South Korea which visited Delhi, reviewed the plans. Lead teams have been established in the company of legal advisors, company representatives who are driving this DRHP plan. Some organizational restructuring is also taking place in Hyundai India. More teams are being set up ahead of the IPO as well. So let's see what happens. But it seems that Hyundai is going in for a DRHP by May, and a possible listing is what the company is hoping for by Q3 of FY25.
Parikshit, many thanks for joining us. And staying with auto, February car sales, a mixed bag, but most companies did record a yearly increase. Maruti seeing a 15% rise in its Feb numbers, selling 1.9 lakh units in February versus 1.7 lakh units year on year. Tata Motors sales up 8% at 86,400 units. Onto two-wheelers, Bajaj Auto sales rose 24% at 3.4 lakh units. M&M also reported strong sales despite weakness in the tractor segment. M&M's total sales grew 24% at nearly 73,000 units. Royal Enfield continues to see single-digit growth, with sales up 6% at around 76,000 units. Sales of TVS Motor up 33% at 3.6 lakh units. Ashok Leyland, though, disappointed with sales down 6% year-on-year at 17,400 units. CG Power stocks surging close to 11% higher in trade today after the company signed an agreement with Renesas Electronics Corporation and Stars Microelectronics to set up a semiconductor unit in Gujarat. The joint venture will see an investment of 7,600 crore rupees over the next 5 years. CG Power expects a 10% profit margin from the semiconductor unit. After Axis Bank, Paytm is said to be in talks with Yes Bank to open a nodal account for 197 Communications. The move is aimed at ensuring seamless merchant settlement beyond the 15th of March, which is the deadline set by the Reserve Bank for the Paytm Payments Bank. We learned from sources that Paytm will also apply to the NPCI for a third-party application provider license with 4 or 5 banks. Ritu is standing by now to take us through more. Ritu, so the transition plan, a work in progress for Paytm Payments Bank.
Well, after Axis Bank, we understand that Paytm is in talks with Yes Bank to open a second account for 197 Communications and Paytm Payment Services to ensure that merchant settlements continue to happen even after the 15th of March, when the bank has to stop its banking activities. So far, Paytm had its nodal account with its own bank, which is where these transactions were settled. But RBI, remember, had asked the bank to terminate this as part of the restrictions that were announced on the 31st of January. And subsequently, Paytm had partnered with Axis Bank to open a nodal escrow account. And now, if these talks fructify, Yes Bank is going to be the second nodal account which Paytm will have, such that its large UPI transaction volumes are handled between these two banks. Now, for the banks, this brings two benefits. One, they'll earn a fee for the merchant settlements that they do for Paytm. And two, they also get access to the float available in the account for a day or so, which can be deployed by the banks, let's say in the money market, to earn income. Meanwhile, we understand that Paytm has applied for a third-party application provider or TPAP status with the NPCI, where it has secured the consent of both Axis Bank and Yes Bank to come on board as payment service providers for its UPI channel. Besides these, we understand Paytm is also in talks with State Bank of India and HDFC Bank. Now, separately, 197 has informed exchanges that Paytm and the bank have mutually agreed to discontinue various intercompany agreements with Paytm and its group companies, and the shareholders of the bank have also agreed to simplify the shareholder agreement to support governance independent of its shareholders. So, after Vijay Shekhar Sharma also stepped down for the board of the bank, this segregation of agreement is yet another signal to the regulator that the bank is attempting to get its house in order. But will any of it change RBI's stance? We'll have to see.
Ritu, many thanks for joining us. Amidst compliance challenges in the fintech industry, the government is aiming at introducing risk-based uniform KYC norms across the financial sector. Sources tell CNBC-TV18 that the new rules may be introduced by June. Sapna standing by now with the details. Sapna, this was a matter that was taken up by the FSDC when all regulators met. Where do things stand on the rollout?
Well, the matter has been under discussion since quite some time, but we are now given to understand that probably the government is now aiming for some kind of a timeline in trying to, implement a risk-based and a uniform KYC process. And probably the timeline is around May, June, or maybe, by the time the next government comes to power. And this has been discussed in the last FSDC meet. We also need to keep in mind that way back in 2023, one of the RBI panels had made some very detailed recommendations in terms of how this risk-based and uniform KYC process can be brought about, wherein, it was suggested that there can be some gradations to the KYC process, say going from basic requirements to very strong requirements. And these are some of the recommendations which are already being looked at. Not just by the financial sector regulators, but also various departments within the finance ministry. So, there seems to be some kind of a consensus that, yes, this needs to be done and not taking too much of time. But this will also need some kind of change in the PMLA norms. That's what we are given to understand. So, it's okay to put a timeline, but we also need to see how this really rolls out. But you can say for sure that, in the coming months, at least, if not the May-June timeline, the government is very, very serious about bringing in a uniform and a risk-based KYC process. And in some form or fashion, that is definitely going to unfold.
Okay, Sapna, many thanks for joining us. Now, the government has said it has released 2 more installments worth 1.42 lakh crore rupees in February as tax devolution to states. UP accounted for 17% of the amount that was released. This is in addition to the over 71,000 crore rupees that was released on the 12th of February. Life Insurance Corporation of India has paid an interim dividend of over 2,400 crore rupees to the government for this fiscal. The insurance giant's chairman, Siddhartha Mohanty, handed over the cheque to Finance Minister Nirmala Sitharaman. Remember, LIC's board declared an interim dividend of 4 rupees a share last month. Sony has moved the National Company Law Tribunal in Mumbai, challenging a plea by Zee seeking the implementation of the merger between the two entities. The tribunal will hear the plea along with other applications in this dispute on the 12th of March. Ashmit is standing by with the details. Ashmit, the legal battle between Sony and Zee intensifying.
Indeed, it continues. Sony, through its Indian subsidiary Culver Max, has filed a fresh application before the NCLT Mumbai. What they're essentially arguing is what their stance has been consistently throughout the last couple of months, which is that as a part of this merger agreement, there was an understanding reached between the two sides that there will be an arbitration clause, that any dispute, if it were to arise between the two sides, will have to be argued, will have to be adjudicated by way of that arbitration proceedings, which is in Singapore. And that is the stance that they are seeking directions on. They're seeking reliefs on from NCLT Mumbai. They're seeking for interim relief, that there be directions issued that the NCLT Mumbai is not the correct forum. The arbitration tribunal in Singapore is the correct forum for deciding this dispute. Now, speaking of arbitration, just to jog the memory of our viewers, let's keep in mind that in month of February 4th to be specific, that's when the emergency arbitrator had in fact allowed Zee to go ahead and to pursue its reliefs, pursue its remedies before the NCLT Mumbai. And it is only after that that Zee had moved an application before NCLT Mumbai seeking enforcement of that merger. Sony is challenging the maintainability of that application by Zee. And the whole host of these applications will be heard together on March 12th. That's when we'll begin to get more clarity on the course forward for both the stakeholders in this case.
All right, Ashmit, appreciate you joining us. We will head into a break, but as we do, the pre-wedding celebrations of Anant Ambani and Radhika Merchant underway. Top global CEOs, including Meta CEO Mark Zuckerberg, Microsoft co-founder Bill Gates, in Jamnagar, Disney CEO Bob Iger will be in attendance after signing that mega $8.5 billion media merger with Reliance in India. The visuals of the celebrations. We're back in a minute. Google has pulled multiple apps from its Play Store without disclosing the names, and this has been done for violating its billing and payment policy. More than a dozen firms have taken Google to court over its billing policy. The Supreme Court is still hearing the case, but it refused to pass interim orders protecting these apps from the Play Store removal. Aishwarya Anand joins us now with more. Aishwarya, take us through the response coming in from companies like InfoEdge.
Google has issued a warning to 10 Indian companies that it would remove their apps from Play Store if they do not adhere to the platform's billing policies. The tech giant has sent notices to companies like Matrimony.com and InfoEdge demanding that they pay the 30% service fee Google charges for app transactions on its Play Store platform. InfoEdge founder Sanjeev Bikhchandani confirmed receiving the notice to CNBC-TV18, saying that they have been compliant with Play Store policies since February 9th when the Supreme Court order came out, and all invoices have been paid on time. He also added that the company is in the process of replying to Google. In a statement to CNBC-TV18, Matrimony.com also said that its legal team is reviewing Google's notice and exploring next steps. To give you some context, on February 12th, a cluster of Indian startups wrote to Google requesting the search giant not to delist them till March 19th when their special leave petition comes up for hearing. The company said that any precipitative step taken by Google would be extremely detrimental to all the participants of the ecosystem comprising of startups and app developers. They went on to say that previously too, Google had voluntarily extended its enforcement of Google billing payment system and user choice billing multiple times. Now, this letter comes after Supreme Court on February 9th agreed to hear pleas by several startups against Google's billing policies, but refused to pass an interim order protecting these startups from removal from the Play Store. Now, while Google has not revealed the name of these 10 companies, it said in a blog post that these developers had more than 3 years to prepare and comply with the payment policies. The search giant further revealed that it currently has over 200,000 Indian developers on Google Play who adhere to its policies. However, non-compliance of these 10 companies is creating an uneven playing field, putting other developers at a competitive disadvantage. This, the blog post had added.
Aishwarya, many thanks for joining us. The WTO ministerial in Abu Dhabi has been extended by a day as 160 nations struggle to find consensus. Meanwhile, Thailand has replaced its ambassador, this after India protested against some comments made on the subsidized food grain procurement program. Abhimanyu Sharma joins us now from Abu Dhabi on the progress so far. Abhi.
The formal closing session of the WTO Ministerial 13 in Abu Dhabi continues to be delayed even as negotiations are continuing on the 5th day. The negotiations were slated to conclude in 4 days, but they are still continuing with ministers and representatives from all member countries engaged in intense discussions to ensure that an outcome comes out of this ministerial. Now, several key takeaways for many countries. As far as India is concerned, one key takeaway is, of course, the fact that India stands to gain from the services agreement, particularly the cost of trading in services would be cut by a new pact which has been signed by as many as 72 countries. Though India is not a signatory to the pact, but India will stand to gain as it is going to cut the regulatory cost of trade and services, in which India is also going to be a beneficiary. Additionally, India has welcomed the addition of 2 new members to the WTO, namely Comoros and Timor-Leste. India has also said that another positive outcome out of this ministerial is the fact that LDCs will continue to get the benefit of being LDCs even 3 years after graduating from being least developed countries. So negotiations are continuing. The issue of remittances, the issue of public stock holding, fisheries continue to be discussed at the ministerial, even as all countries are engaged in discussions to ensure that an outcome comes out of this ministerial.
All right, so extended by a day, negotiations underway at the WTO. Abhimanyu, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360, but more glimpses of the celebrations in Jamnagar ahead of the pre-wedding celebrations of Anant Ambani and Radhika Merchant.